Because slideshows are boring.
Yeah.
Real life is on the chart. That's the stock market. That's the difference in investing and trading. But I do want to like have this pulled up just so I remember, like, because this is where we were talking about. Some people will say that price moves because of the news, and then some people will say that the news moves based off the price, but they're one and the same because it's all just supply and demand issues. Like we know in the 2008 housing crisis, something happened in the Middle East 2012, can't remember. 2018, Trump and China trade wars, the 2020 pandemic, and then the 2022 Ukrainian and Russian war. We couldn't import and export during any of those times. So it's you have these companies that we trade or we invest in the most, like Apple, one of the most invested companies out there, right? Apple couldn't get chips in China, especially not in 2018 with the Trump China trade war, right? Definitely wasn't happening in COVID. And it for sure wasn't going to be able to get them while China and Taiwan and Ukraine and Russia are beefing, you know? That's all it is. They can't get their supplies in order to make more money. So of course the share price is going to drop. But if you've ever heard the saying war is good for the economy, that's really why. So then you have your bull market characteristics here, what it'll look like. And then in a bear market, this is when, everything that we just kind of talked about here. And this is when the companies are most overvalued, meaning that their share price is a little bit higher than what it might actually be worth. So then we should expect for the price to probably start to come down, which is just the cycles. It's just the cycles of the economy, literally. Just one of my little sayings. So technical analysis, fundamental analysis. I think I might have pulled up the screen. Oh well, this is one of my longer classes, but it's okay. We can still go through so you can pause and look at all of them. But so, I should say the easiest way to remember is fundamental analysis is anything that's off the chart that has to do with the company. So the financial metrics, which is everything you said earlier, like the cash flow or the balance sheet, income statement, and really dissecting those and what you want to look for. And then the metrics like the PE ratio, PB ratio, and all that stuff. Listen, I'm the one I'm gonna keep it real with you. The chart gonna tell you, but we'll look. The chart gonna tell you. You don't need to sit. By the time you sat here and you calculated the PE ratio, I'm already gonna have pulled up the chart and been like, oh, it hit the support trend line on the monthly. It's it's at a low. It's a good time to buy. But whatever. Oh, this is supposed to be at the beginning. This is me. Yay. This is what I do it for my god kids. I was in the army. I'm sarcastic. All that stuff.
Oh, okay.
Hey, so the initial public offering, so the IPO do you know how the IPO works?
Initial public offering for like new companies, right?
Mhm. Okay, bet. Period. So yeah, I'm sure you already know all of this stuff then. You came from Forex side. So like what a share is in a stock. I just
Oh
want
yeah.
to, I don't want to waste your time. Okay, cool, cool, cool. Fundamental analysis, value versus growth companies. Okay, it is important to know, like, eh, the stock market is in a gray area, just period. But if we wanted to do black and white categories, that you could break the stocks down into value companies or growth companies. So a value company is going to be a more mature company, meaning it's been around for a long time. So what's a brand? Not like think about like at your grandparents' house. What is a brand that you see at your grandparents' house all the time?
Wonder Bread. Uh, um, shit. Pepsi, Coca-Cola.
Okay, facts. I don't know who owns Wonder Bread. Let's see if anybody owns Wonder Bread. Well, obviously somebody owns them, but I mean, look, let's see. American. Yeah, but who owns them? Flower Foods Incorporated. Oh, it is. It's publicly traded. FLO. Flower Foods. Look at that. Let's look at it on the chart. I knew I should have shorted this. That's fine. I traded this all the way up, but all right. Sorry. Hello. Flower Foods. Look how quickly we just found out that that company is publicly traded. Never would have known. I'm gonna go straight to the weekly time frame on the chart because I don't really care about what's going down. Dang! Wait a minute. This company actually does pretty well. I mean, it doesn't move a lot, but this is, hey. I mean, I probably actually wouldn't want to be invested in it, but I wonder what made them have this drop here. So these are just, this is, let me pause this really quick. Well, that's lit. Do you use TradingView?
You said do I? Yeah. I use TradingView.
Perfect. So this is actually where I go to because it keeps my interest the most. So, you know, if you click like the E or even down the earnings or the dividends tab at the bottom, and then you
Yeah.
click on the more financials, it's gonna pull up everything that we're gonna go through today. You got the income statement, the balance sheet, cash flow. You can look at all their valuation ratios, profitability ratios, dividends. But then even on top of that, this is like a hidden gem. Like people, I feel like a lot of people don't know that. Even on top of that though, let's say you don't know, you forget what is cash from investing activities? What is that? Oh my gosh,
Oh, that's
let's go.
oh no.
Well, I'm sure I mean, it was like just an example. Like if you were to forget, it's an interactive resource, is what I wanted to show. It
Okay.
shall teach you as we go. But let's come back over here. So yeah, more mature company, something that's been around, this has been around since 1919. I would assume that this is a value company. You're going to see it mostly, and it's in consumer staples sector. You see it mostly in these sectors, and typically they will pay out dividends. They'll have revenue be high enough that they can pay out dividends, and they do. And it definitely shows that they have increased their dividends every year for the last 7 years, since 2017. So that's lit. And then a growth company, we'll kind of just go through this thing. I see you ready. And then a growth company is something that is going to be a newer company. So, and it's expected to outpace the market, is going to have pretty much a cult following. And you'd mostly see it in technology and consumer discretionary. It definitely makes sense that you would see it in technology because technology is always expanding, always growing, right? So I think it's important for me to cover that there is a difference between a value and a growth company, just for the simple fact that maybe you wouldn't want to have a portfolio that was mostly growth companies, right? Why do you think I say that?
Because there'll be kind of like a risk.
Because you'll be what?
I said because it's kind of like a risk since it's like a new company.
We could, yeah, in a sense, for sure, for sure. And then think about what's the first thing that people gonna sell off on when the market starts to drop? Technology companies.
Oh, okay.
Yeah. So it's like, you just probably don't want just a fully, now that's not to say you're not gonna make that money, right? I mean, let's look at Microsoft. Let's look at Meta. Those are all, freaking Tesla, gosh darn. Listen, I'm finna stop code switching. Let's look at Tesla, goddamn. Like shit. Like you gonna make that money being invested in Tesla, but you also gonna lose it. Cause when it drops, it drops. Yeah. So I think it's important to have value companies. I think it's important to have value companies in your portfolio because Again, it's something that's been around for a long time, gonna stay around. Look at Coca-Cola, right? But we're gonna talk about that because I don't even necessarily think KO is just like the best thing. I'd rather be invested in Pepsi. But a brokerage firm, market cap. It's like I don't want to bore you.
Oh,
So
it's all good. I'm willing to learn. Like
okay.
I don't mind going back over like the basic stuff if you don't mind.
So market capitalization is just the value of the company. So we got the large cap, mid cap, small cap. And I think this is important to know too, because you want to know how these stocks are categorized. You want to know. Now, personally, I don't even think you should be invested in that many individual companies because of the simple fact that you're gonna have to sit here and research all those individual companies and keep up with them. You might as well just be invested in an ETF or an index fund.
Yeah.
It does the work for you. Because the thing is with SPY, so I always use Twitter as an example. Now it's X, right? But Twitter, when it was on the stock market, it was in the S&P 500. When it got delisted because of what Elon Musk and all that craziness, right? When it got delisted, SPY didn't dump. Like when the price of Twitter did start to dump before it got delisted, SPY didn't dump. All it did was it moved Twitter out and replaced it with the next best. It does the work for you. So to me, okay, it just makes sense. I don't like to think that much. I just want to wake up and just have a green portfolio. That's what I like to do. So one of my favorite sites to use is ETF.com because you can compare. I love, 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 love to compare these to each other. Did you download the Wealth Prologue? It's free.
No.
Okay, you should. It's at the link in my bio. I can send you the link in the Instagram too. But like the Wealth Prologue, totally free. And some of these slides will look very familiar to you. But I actually break down the stock market like A to G with that one. It's pre-recorded course, so it has I think 50 videos, 40, 50 videos in there. It's like, but yeah, so I like to look at this because I like to compare. So you got SPY, which is for the S&P 500, but then you also are gonna have the Vanguard, right? Which is where you're gonna have the VTI, VOO. You heard of those? Yeah.
Yeah. I heard of Vanguard
Vanguard.
and Spy too.
So SPY is an ETF. Again, I'm just asking, do you know what an ETF is? Because I know you said you come in from Forex.
All right, so that's like a basket of stocks, right? And it kind of mimic like the market.
Yes, SPY does. Not all ETFs, but SPY specifically, yes, because it's the largest 500 companies in the market. Exactly. So I actually call it an Easter. I always use an Easter egg or Easter scenario. So the index, which is the S&P 500 index, or you would have the NASDAQ or the Dow in indices, right? So
Yeah.
the index is the Easter egg basket. Inside of the Easter egg basket, you're going to have a bunch of eggs, different colored eggs. Those are the ETFs, like SPY or VTI, or, it's the ETFs. Those are the eggs. Inside of the egg, you always have candy, right? Whether it's Starburst or in another one, it'll be chocolate. That's the individual company. So I always break it down like that. I don't know. My brain's different. But yes.
Could you repeat that again about the Easter egg one? So you said spies like the Easter egg basket, and then you got
No,
what else?
so the S&P 500. So
Uh,
you have indexes, right? It's correct grammar is indices, but you're gonna have different indices, different indexes. So you have the S&P 500 is one index. And
oh
then
yeah.
you have the NASDAQ 100. That's another index, right? Then you have the Dow. That's another index. That's the Easter egg basket. That's the overall thing. Now, the actual inside of the basket, you have eggs, right?
Yeah.
That's the ETF, is the egg.
Okay.
Then you open up the egg and there's candy. That's the individual company. The egg holds the individual companies. Yeah. So the
Yeah.
ETF is going to hold the individual company. So it's like you might as well just invest in the ETF. Like people just be wanting to, we're gonna get there. We're gonna get there. Just I'm gonna talk how I talk. You follow me on Instagram. You know I'm the female in the bonnet. I'm gonna talk how I talk. No more code switching.
All
I be trying
right.
to tell people don't make the mistakes that I made. I could have 9 figures right now if I would, but I didn't have anybody telling me or explaining it to me along the way. Right? Like I was spending way too much time like trying to invest in Peloton and make sure that I sold it right at the tippy top and then go put it in somewhere else and do this and do that when I could have just sat it up in SPY. Because SPY gives you on a bad year a 10 to 12 or a 8 to 12% return on your money on a bad year. On a good year, I mean, come on. Especially when you're coming up out of a market dip, right? You're gonna have the market, I mean, so which is what we're coming out of literally right now. So I'm gonna go to SPY. This not even a year. October 2023. It was at 409 coming out of this market dip.
Damn, that shit went crazy.
It's at 514 now. Like, come on, man. And we officially in a bull market now. That's it. That's all that's it. Like it's just going up for the next 2 years. I've already gotten a 25% return on my money, you know? So on a bad, like just invest in the basket, child. That's what I be trying to tell people. You don't have to do all that thinking. Now, of course, do I want to be invested in freaking Nvidia? Of course, because I'm gonna do my work. And back then I understood that so I literally did like a challenge in my Discord and I bought people the top 3 people who had the best analysis of Nvidia. This was like 2022. I bought them shares of Nvidia when the shit was sitting at like $100 because like semiconductors were taking over, which was obvious that semiconductors were going to be taken over, right? They were because the gosh, this was when the Ukrainian war and stuff started. We couldn't get microchips. We couldn't get the semiconductors over there. So domestic semiconductor companies were going to take off. And so again, it's all about knowing and understanding the economy and keeping up with the news. And it just became, I don't even need this alert. And so it just became obvious, oh, it's time to put your money in semiconductors. And again, this was in 2022. $106. The thing is at 900, close at $926 today, you know? And so yeah, you want to be invested, you want to stuff like this. So right now, like, what is like the number one thing that people are talking about? Like, you see it everywhere you go. Everywhere you go.
What you mean?
You know it. Everywhere you go, like any website you pull up, anything that you look at, what do you see now?
Shit, Apple, Apple Vision Pros or something like that.
Okay, so virtual reality, bet.
Yeah.
Yeah, definitely want to be invested in virtual reality, and the gaming world is taking off. What's going on in the gaming world? It's getting integrated with what? And virtual reality is getting integrated with
What AI,
period.
artificial intelligence.
We might want to put our goddamn money into AI. Huh? You stay
Yeah.
ahead of the trend, you invest ahead of the trend, right? So you
Yeah.
got companies like ARM, but then even more so than that, we see that average investor is not going to invest in Nvidia right now. The average fresh investor is not investing in Nvidia right now. It's out of that average fresh investor's price range. That doesn't mean semiconductors are over with. So guess what? It's a simple Google search, but I'll tell you right now, right? Qualcomm. affordable competitor. It's up next. It's coming to all-time high. It made this loop on back up here since oh my gosh, October 2023. Huh. When SPY bounced, right? But anyways, made this push back up from 109 to the 175, all-time high at 193, and it's just gonna keep going. Affordable competitor, definitely AMD. We caught this. We caught this.
How,
I'm so
how do
excited.
you find how do you find like the competitors inside the semiconductor sector?
That is a great question. What is the number one question answerer that we have? Google, which, hello, AI. Oh my God, is AI getting integrated into Google? It is. Maybe we want to be invested in Google. Matter of fact, this is one of my favorite things, actually. I got you. Well, one, you can do it on Google, but then two, that's not what I meant to do. I actually put a reel up about this, actually. How you can use ChatGPT to help you. So you can ask it anything, right? So I'm going to say, who is NVIDIA's portable competitor?
Damn, I ain't know GBT was for all that. I
I
never
put
knew
a,
what was ChatGPT.
I'm gonna tag you in this reel that I did. I gotta start pushing my social media content harder, but I just don't be caring. I just want to teach. I ain't like literally. What's your? Is it Bond? Right?
Oh no, it's Barney, BARNEY 101.
You didn't pull up maybe because I don't follow you. I'm about to put it in my stories, and then just whenever you can. Literally watch out there. Yeah, ChatGPT is lit, which is just even more so reason right here telling you you need to be invested in AI, right?
Mm,
Do
yeah.
all yeah. So AMD, but you can also go old school with it, and we can pull up a heat map. So I like to use FinViz, and you got you a heat map, stock map, whatever you want to call it. Sometimes I call it the periodic table, and it's right here. So the what it does, and it's just for the S&P 500. So it's the largest 500 companies in the market. So what it does is it breaks these 500 companies down by sector. So you got the technology sector, communication services, healthcare, right? But inside of each sector, you have different industries. So in the technology sector, we have the software infrastructure. So you got Microsoft, Oracle, Adobe, right? So on and so on. We have the semiconductor sector. Look, you just found their competitors right there.
Keep going. Oh, I see it.
You got NVIDIA, Broadcom, Advanced Micro Devices, so AMD, Intel, Micron, Qualcomm, Texas Instruments, so on and so on, right? ON Semiconductor. I absolutely believe ON Semiconductor is up next. Now,
Hey, so what are semiconductors?
oh my God. It's the chip that goes into any device. What is a semiconductor in oh, layman's terms? We don't care about the breakdown. Is this a material that can conduct electricity under some blah 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 blah? It's like a switch that can turn electricity on and off. So it's like,
Okay.
yeah. And so it goes into the microchips that goes into any electronic, any appliance. Everything has a dang semiconductor in it, right?
Uh,
So the more technology booms, the more the semiconductors are going to boom. Is what all of those companies are. So we love it. Let's see. So you got AMD, more affordable, right? Investors are gonna start pouring their money over into these. So it's like you don't worry about trying to invest in Nvidia. That train gone. It's gone. A year and a half ago, it was $100 something. train gone, leave it alone. You look at their affordable competitor and you start to do your research on them, right? Okay, so, but, oh, that's what I wanted to say too. Now, mind you, remember we talking about the Easter egg, which is the ETFs. It's the egg. Each sector has its own ETF. So the technology sector, because Microsoft is $409 by itself. Okay. NVIDIA, $929. You want to get Apple, that's $169. You could invest in the egg, which is XLK. Oops, no, go back. Give my chart back, right? Well, I don't need any of these lines. Caught this bottom here, October 2023. But anyways, you could just invest in the technology ETF. So now, what if you say, well, what comes with technology ETF? One, we could ask ChatGPT. Withholding percentage. You're gonna get, it holds 20% of Apple, 20% of Micro, well, that's not accurate, but that is like the top ones. So what we're gonna look at is, I like to use ETF.com. So all of the ones that I'm showing you, they are free resources, which that's what I like. I might be one of the most frugal, well-off people you ever met, because well, I gotta pay for everything. So we'll type in, I'm just gonna type in XLK. Oops. Technology, and then over here, we can just type in technology again, and then ETF, or we'll just compare it against SPY, just to pull something up. And it's gonna give you an overview where you can just click on XLK right there. And you'll get a nice little overview. Scroll down. You can see the focus is for information technology. Where's the holdings? Click on holdings, sorry. And then it breaks it down to you right here. There we go. So you get in 23. Oh, wow. Microsoft is the largest holding now. That's crazy. All right, cool. So you're getting like 23% of Microsoft and just the breakdown there, right? Because again, it would cost you about 10,000 plus to own, and that's on the very low end side of it, to own all of the major companies in the technology sector. To know when you could just invest in the ETF. Now, let's say that one day Cisco Systems is not a good company anymore. XOK isn't going to come crashing down because it's just going to replace it with the next best technology company. XOK is always going to do well, right? Because the technology sector is always going to be around. Some of these companies might come and go, but the sector is always going to be there. So again, I just wholeheartedly stress to invest in the ETF and just invest in the ETF. And then when it comes to the individual companies, invest in what makes sense right now, which, as you've already said, AI, and semiconductors are still taking off. But I wanted to show you. So XLK for the last year, because remember what I said, on a bad year, you getting like 8 to 12% on a return. But imagine when you coming up out of a bear market, coming back to high, you would have got almost 48% of your money back in a year. And what did you have to do but say, hey, I want to be invested in the technology sector? 48% of your money back. And it's still going. Because year to date is from the top of the fiscal year. So January, the first trading day of January until now. You already 7.5% of your money back just from January till now. Get
Oh,
the
so YTD means from like the beginning of the year up to now.
Mhm.
Oh,
And then 1
okay.
year is going to be from now till March 2023. Or yeah, March 2023 till now, March 2024.
And
So
so why we comparing XLK and SPY?
I just pulled something up just so I could get this because I didn't know how to get to this. This is
Oh,
what I have to see, but I know if I do a comparison, I can see this.
okay.
We're just looking. But shoot, even when you kind of compare it,
And then so SPY is the ETF and the SP 500. That's the index, right?
yes, right here. SPY is the ETF. The S&P 500 is the index. Yes.
And just like Nasdaq and US 30 are indices.
Yes, and then exactly. And so QQQ is the
ETF.
or yeah.
All right. Oh, that right there dope though. That like shows you like their top holdings and stuff, and like what like has like the most impact on the ETF.
Mm,
You know?
I don't know. I mean, I think you just have to like type in what you're specifically looking at, or you could probably just even just like literally ask it in Google. But yeah, I'm not sure.
Yeah, like for example, like the XLK, wouldn't like the once you go to like the holders and you see like okay, Microsoft, they have like most of their holders in Microsoft, wouldn't like maybe like bad earnings are probably make like this ETF sync if
No,
like
because
Microsoft report that.
no, because it's only 23%. The other 80% is doing well,
Oh, okay.
right?
Oh, okay.
Numbers game. You got to flip the numbers around and think of it on the opposite side of it. So just because one piece of it is doing bad doesn't mean that the stock gonna come tumbling down. So for example, let's compare. This is XLK. We'll do it on the daily. So we got XLK, top holding Microsoft let's get on the daily. Oh shit. Yeah,
Go ahead.
that's a morning star on the daily. Hold on. Un momento. We might want to trade that tomorrow. Let me set this alert. Let me know when you cross that trend line.
Man, I don't know what's up with my trading view because I be like saying alert saying it don't even be like alerting me or like nothing. I'm like, damn, I be like miss my fucking signal and shit.
Okay. Mhm. All right. Apple came tumbling down. Came out that the EU sued them for $1.5 billion this week. Apple came tumbling down. Did
You
Excel?
said what?
Hmm?
Oh, what'd you say?
I said Apple came tumbling down this week. It came out that the European Union sued them for $1.5 billion for misusing data, supposedly, allegedly, right? So Apple lost about $30 in just a couple of days. It came down. Did XOK on the left-hand side? No, because Apple is just 20% of the whole thing, right? You still got the other
Oh,
80% doing very well.
okay.
That makes sense?
Yeah.
Period. Is that a bullish signal? Like I'm gonna tell you. Search Morningstar in the top right. It should for you. Duh, I don't hand nobody nothing. Yeah, I know, they know that. Like I what? I gave you the chart. I gave you the analysis. Go research it. Yeah. Shoot. What am I looking for? I don't know. Oh, let me see. The ADD takes over sometimes. What are we here? We're not doing technical analysis. I'm sorry, fundamental. It's one and the same to me. I just get
It's
it.
all good.
I can talk about the market forever. Okay. Okay. So ETF comparisons. I wanted you to know that the sectors have them. Boom, 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 boom. This is just showing the holdings, the heat map. We already did that. Risk management. Okay. Oh God, the ratios. Okay.
Yeah, does that even like matter? Like the ratios?
Huh?
I said, does the ratios really matter?
To me, it's important to know them, but I'm not one that's
Okay.
just gonna sit here and dive in on, you know, because it just be like, and you'll see why I'm sure. But okay, so and plus I'll have a worksheet to give to you because I ain't gonna lie to you, I personally just don't care about them that much because the chart gonna tell you. But we'll see. All right, so the three most important ratios that you do want to pay attention to is, and you don't have to take notes right now because remember I'm recording this and I'm gonna give you the link. And the link
All
will
right.
expire, so you're good. So the PB ratio, the price to book is just the book value. I ain't even gonna hold you. I'm gonna pull my notes up. Make sure I say it right. So get mixed up every time. But like I said, I also have a sheet to give you. Okay, but so it's the book value. So basically it's showing it's the market capitalization pretty much, right? So if the share price is lower than the value of the stock, then that stock is undervalued. So looking at these ratios, the reason why you do want to look at them is because you want to know, is the stock overvalued or undervalued? And I don't want to buy, we'll say Microsoft. I don't want to buy Microsoft when it's overvalued, right? Because that means I'm going to buy it at a high price. But this is why I say that the chart gonna tell you, if you will. So for example, I just started investing in a stock called AMAT. Now, AMAT makes the materials that makes the semiconductors, right? So, and I literally just put it out in here. I think you're in the Discord, right? So you saw, what was this at the end of December when I just like updated what I was going to add into my portfolio. AMAT was one of them. And that's what I did that reel on that I just put in my stories. They make the materials that makes the semiconductors. So it's the top of the supply chain, right? So me, like if we're looking the 29th, I bought it like when it started to pull back to the support trend line. Because duh, that's a low, you know? Whereas duh, if I'm buying up here when it not only broke my support trend line, but it also broke the resistance trend line. I know that's like a little ugly, but it also broke my resistance trend line and it's at all-time high at that too, right? Like this is an overvalued stock at this point. I would be buying it at a high when I know that price is going to pull back. So I might as well wait for it to pull back and then start my investing then, right? Or if you went ahead and bought it now, right? Because who knows when it would pull back? Maybe it might take off for another $2,400,000. Who knows? So it's like it's okay to if you were to go ahead and invest in then, as long as you know that hey, when it came here, this is a low, this is a touch of support. You might want to average in right here. That's to me why I'd be like the chart tell you. But the PB ratio will also tell you that too. I found it, it's bullish, period. Okay, so the PE ratio, I actually do pay attention to this one though. So this is the price to earnings. So you would take the price, the current share price, and divide it by the earnings. So the earnings you would take for the past 12 months. So let's say that we'll just say that Wall Street been, I don't know, we'll say Apple made $1 million in the last 12 months. So from March 2023 to March 2024, made $1 million. And the current share price is 169. So you take 169 divided by 1 million, and then that's the PE ratio. So this is just, again, it's telling you, is this company overvalued or not? Is it trading higher? So now it goes to, well, how do I know if this is a high PE ratio? You have to compare it to the average PE ratio. So you got to do some math. Or you could just type it in. There are different websites, and I'll show you. Or you could go in and it'll just tell you like what the average PE ratio is and what it is now. Now, there's going to be some companies that are just going to have extraordinarily high PE ratios, and that's going to be a growth company, right? Because they're outpacing the market, they're taking off, like Nvidia. Its PE ratio before 2022, the average PE ratio was probably like 10, and I think at right now it's like 200, right? Well, duh, because it just took off. It's like the top hottest stock on the market. And then the free cash flow. We definitely want to pay attention to a company's free cash flow, because this is basically their savings account. That's how I look at it. Like, they got some extra money on the side. They paid all their bills, all their employees, nobody being sued. Okay, they got some extra money. That if we see that they are decreasing their free cash flow, I want to start to dive into their behind the scenes a little bit more and be like, okay, well, are y'all investing in something? Are y'all about to acquire another company that y'all needed to come pull from your savings account? Or did you have to pull from your free cash flow because your debt increased? Right? Are you in too much debt that you have to come into the kids college fund to, to start paying off some stuff? That's a little concerning to me as an investor. Then we also have your profit margin. So this ratio is the percents of the revenue that translate into profit. You know that. The higher the profit margin, the better the company will probably be doing, right? Because they're doing well. The return on equity is just letting you know what is the probability, I guess, of you getting your money back, and especially this company making their money back. And then the same as the return on assets. The definitions are here. It's in the name. Now, two things you definitely want to look for sure, because there's so much to comb through. But when it comes to when you go into looking at these numbers, when you go into looking at these financial metrics, you want to know, are they increasing or decreasing? And people are always like, well, increasing or decreasing what? Everything. Is their revenue increasing or decreasing? Is their debt increasing or decreasing? Is their employee turnover rate increasing or decreasing? Are they is their supply increasing or decreasing? Is the demand for their product increasing or decreasing? All that you want to know. And then debt. I think honestly that's the first thing that I go and look at is their debt year over year. And then their operating margins, because the less that they're cutting off on things like their operating margins, the less likely that they are going to be to cut dividends if they are a company that pays dividends, which we know is typically a value company. Most growth companies aren't paying dividends because they are still innovating and still growing, right? Growth companies. So everything they get, they're investing back into themselves. They don't really have like the extra money to thank their shareholders quarterly.
All right, so you go ahead. So low operating margins. So you're saying that they are less likely to cut dividends and assets.
Mhm.
And so why you say they would be less likely to like pay out dividends though?
Oh, no, I'm saying a growth company. I think I had two different thoughts, my bad. I was saying that a growth company is less likely to pay dividends because they're still growing, right? That company is still growing, so they're every penny that they get, they're investing back into themselves.
Okay. Hold on. Hello. And what you mean about cutting assets?
Companies have assets, right?
I mean,
And so if they
that
sell off,
they
hmm?
so you say,
Well, so hold on,
oh,
let me rephrase that. So the operating margins, that's how much it costs that company to run.
yeah,
So Wall Street been black. My operating margins is my utility bill, right? Um, the insurance that I pay on my desktop and my
research
Samsung,
and development.
huh?
Oh no, I'm sorry. I didn't mean to cut you off.
Oh no, go ahead.
No, keep on going.
Oh, so like Wi-Fi, anything that costs me money to stay open, right? Like paying Zoom monthly. Those are my operating expenses. It's my operating margins, right? Now, if my operating margins increase and they get high, I'm gonna have to raise my prices, right? Or which means that I'm not going to be doing as many of like these classes right here. Because no shade, I'm not saying this in any bad way at all, but I enjoy pricing this even from your reaction when you were like, oh, it's a live class. Most people always come to me and they're like, wait, I can sit down with you for $100. I'm like, you just want to talk about one subject. I'm not going to sit here and charge you all this money. You know, that's a waste of time because I enjoy, well, not a waste of time, but that's not fair to me. But let's whenever my business hasn't made that much money that month, I usually take these down because I want to be able to sell my higher ticket pricing, right? My like, and so if my bills were to raise, like let's say I went out of town one week and I accidentally left the power on, left all the lights on, which I did one time with the air running, came back, my light bill was like $600. It's my office building, right? Hey, I, I had to cut my dividend in this case, like doing like these classes or, something like that. And I had to push like a webinar that had a higher price so that I could make up for that extra bill that I had. Does that make sense?
Yeah, so would you say that like profit margins and operate margins, if it's high, then it's like good for a company?
Yes. If,
Okay.
yeah, it low. We want low operating margins because that means that what they make, they only have to pay a little bit, right? So if my operating margins monthly is $1,000, but I'm bringing in $10,000 a month, that's low. That's only 10%. Like, I still get to pocket the other 90% theoretically, right? But if like the month when in my office the bill was higher, that my operating expense was a little bit higher. I wasn't able to bring in that much.
So we want low operating margins for a company.
Yes,
All right.
absolutely. Because it means that they know how to like manage it, right? They know how to keep their expenses low and bring in more. We like a company that know how to manage money.
Okay.
Like if you spending all this money to keep your doors open and you just barely breaking even to pay your bills, I probably don't want to be invested in you. Because how am I gonna make money when you barely making money? And just start off with the index fund and the ETFs. Okay, that's the slide. Now let's get on over here and let's look at this. This is the fun stuff. And I like to look at it on here. So we are going to look at, let's go to ChatGPT. Well, we'll just ask Google because chat probably wouldn't know. I think it was said it was last updated January 2022. So we'll just ask top AI companies. You're gonna have so many opinions here, right? So we'll look for a reputable site. I love Investopedia. You can never go wrong with Investopedia. If I see a site, if I see this on Investor, what updated March 1st? What? You can't tell what? Let's go. Okay. So clearly moving past it, unless you had a capital. I'm not counting your pockets. But listen, you have more. Oh my gosh, look, and they break it down for you. Value stock, something that's going to be around. Of course, HP. And then you can sit here and you start to do but at least we starting somewhere. We know not the brand. We know the what you call it. We know the what it is you want to invest. We know we're interested in AI. All right, we narrowed it down to that. Now we're starting to collect companies that we want to start to look into and do some behind the scenes stuff on. Now, of course, you still want to know about the management of this company too. The health of this company. You want to know their guidance, their forward guidance. Like, what do they plan to do in the future? Do they plan to partner with another great company? Or do they plan to acquire another great company? All that stuff. It's not just the financial metrics. I feel like so many people get hung up on that when that damn chart gonna tell you. But let's see what we want to look for. Fast growing AI stocks. We're just gonna go with AMD. We're gonna look up AMD. And I'm gonna put this in the chat. Copy and paste this in the chat so that you'll have this I think you should look through this later.
Okay.
Oh, shoot. I guess the hour is up. Do you still have time?
Yep.
Okay. I'm a talker. Is my bad.
Oh,
Okay.
it's all good. I'm actually enjoying it.
Oh, yay. Okay. So we're going to go AMD. I'm on to the daily so we can get to the E, more financials, and let's get it. So founded 1969, but it's in technology. Yes, it's been around for a long time, but it's definitely a growth company. It is not a value company. This will tell you like what it's about, all that. I mean,
Why you say that it's a growth company?
because it's in the technology sector.
Okay.
Okay. Well, it's not a growth company because it's in technology, but it's a technology company. And then it also it's a growing company and it doesn't pay dividends, which was a sign, right? We don't necessarily have to get hung up on it, but I think again, it's important to know that, hold on, do I have too much technology in my portfolio? Let's see. So this will tell you about it. Now you see right here, the price to earnings. TTM is the trailing 12 months, which just means you count from today back 12 months. So today to March 2023. But the price to earnings 402 is ridiculously high. Duh, because it took off. Now I also love that you can go straight to the company's website from here too. Lit. You definitely want to click around on a company's website. Especially and click on their solutions. Ooh, AI solutions. Ain't that what made us pull up AMD in the first place? I'd be reading this. Discover how AMD and its partners are powering the future of AI. Got a whole video. Of course, they put an Asian woman on the cover, right? It's too I shouldn't have said that. I'm sorry. We're not code switching anymore, whatever. But yeah, if we're looking at investing in something, you dive into that company. So it might take me about an hour to really research a company, but most of the time I'll know within the first 10 minutes of if that company is even something that I want to invest in. Like Wonder Bread, Flower Foods. I mean, yeah, cool, but just automatically I was like, I'm not interested. You've been on the market for 70 years and you only at 25? No, thanks. Yeah, already. But back over here, sorry. Okay, so you got your I went here and that's where it took me to the website. the growth and probability. So this is just like the very general page for you to kind of be able to break it down. You got your like your earnings report information, the revenue, and the EPS, the earnings per share. So, the earnings report comes out every quarter. And then you have your financial health. It's letting you know right here and you have the legend, the pink is debt. So when and then the light blue or the greenish one, whatever is the free cash flow, and then the purplish one is the cash. So right here, I don't know, in 2022, their debt, they had less debt, more cash. And last year you had a little bit more debt. A little bit more debt, and that free cash flow sure did decrease. But there was a reason why. There was a reason why. They
Go
took
on.
free cash flow and they invested in themselves so that they could up how much they were producing, how many semiconductors they were producing. And AMD is absolutely taken off. It's absolutely taken off. It got upgraded recently. The price target, I mean, it's beautiful. AMD is next up. It's just next up. Facts. But anyways, but that's something that you write down as you go, right? Like I write down as I go. I don't just like stop. I'm gonna like just stay here on this page and I would write that question down. Why did AMD's free cash flow decrease in 2023? And guess who I'm gonna ask? Google.
Oh.
Not chat, because chat hasn't been updated since 2020. I know, I wish. But good job. Is determined by adjusting net cash provided by operating. They telling you themselves right there. You can pull this whole thing up and it's telling you right there. The site, the people, AMD, telling you. We finished 23 strong with sequential and year-over-year revenue and earnings growth. Absolutely true. Demand for our high performance data center product they chip continues to accelerate, positioning us well to deliver strong annual growth in what is an incredibly exciting time as AI reshapes virtually every part of the computing market. They just invested back into themselves. That's why they don't pay dividends, right? They upped their gaming segment too. Gaming segment revenue was $1.4 billion, which was down 17% year over year and 9% sequentially due to decrease in semi-custom revenue, partially offset by an increase in their GPU sales, which is the gaming product, something. I be having to look it up. I'm not a tech nerd, but I am addicted to wealth. And I know that so I've just kind of like dove into semiconductors in the last, or I guess like all of this stuff in the last 2 years, just to, yeah, because you just could tell it was coming up. Blah, 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 right? And you can find the answers right there on Google. So that's like your overview page. Then we go into the statements. Now, by default, this stuff will be highlighted. And I think it's because it's the most important stuff. And by default, it'll be on quarterly. I click it to annual because I want to look year over year. So we can see that their revenue. Remember, trailing 12 months is from now. So in December, this will change to 2024. But for now, it's from the past 12 months. This is what the revenue is. Just a beautiful increase in their revenue. We just kind of briefly saw why. I mean, but they just barely lost on revenue, just barely, right? You can see what the gross profit is overall. Now, remember what I said, if you happen to be like, oh, I do want to show you that. If you click on here, it's going to show it to you in depth what the revenue was. Like, you should really sit there and break it down. But if you click on the question mark, it's going to tell you what is revenue? How's it calculated? Why is it important? So I like resources that are going to teach me. And so a lot of people will be like, why are you showing how to do this on TradingView? And I'm like, because it's going to teach people. Like I could sit here and explain every single one of these right now, but you'd forget 90% of it by the time we got off. So might as well show you a resource that'll teach you. And so you can see that the revenue, or no, and then you have like, let's say that you wanted to look at the cost of goods, and it has this arrow right here. This is gonna break down the price of goods by the depreciation and amortization of it. Then you can break that down to look by the tangible and the intangible stuff, what they lost on. So don't sleep on it, for sure. The profit, operating income, just all of this here, right? And I definitely look at the total operating expenses. And I don't know why this one isn't highlighted, but I check those out. The balance sheet. The main thing that you want to check out is their assets, liabilities, and the net debt, right? I need to know their assets. Make sure it's on annual. That's what I like. Their assets are increasing. That's beautiful. When a company can increase assets, what? Their liabilities are decreasing. That's beautiful. An asset is something that makes you money. A liability is something that costs you money. Y'all decreasing on your liabilities while increasing assets, while decreasing debt. We like that, right? That's beautiful. Does that make sense?
Yep.
Got quiet. Okay, so then I can click on the assets and the total current assets. Man, it's gonna break it down from the cash. And short-term investments, you can break down the investments from like, and that from the total receivables, their inventory. What was good from the wrong, I mean, just everything to really be able to see it. If you wanted to dive that deep into it, right? If this was e.l.f., the skincare brand, I would be all up in this. My brain doesn't too much care about this. I just understand that it's a great investment. So I don't too much but that's me. You a man, so I'm a stereotype you and assume that you probably would like to read into all of that. And then on the cash flow, this is where we come into like the operating activities, right?
Yep.
So decreasing operating activities. Hold on, let me see. What is important for determining the financial success of a company's core business? It shows how much cash is generated from a company's core business operations, such as the production and sale of goods. I guess I just thought it would have been, oh, okay, because I think I'm expecting it to say operating expenses. Okay, never mind. All right. So in there, and then free cash flow for sure. Decreasing on their free cash flow, it's a bit concerning.
That's a red flag.
That's a red flag. And so
Unless it's reinvesting within itself, like you say, right?
exactly. So we'd have to write that question down and go hunt for it. If we see it was for a good reason, hey, I like you. You trying to grow yourself. If it was because the debt was increasing, but we already saw that the debt was decreasing, then we'd be concerned. So right now we could still write it down because we know it's not because of the debt, right? Because that they was okay over there. We know it's not because of that. But we still want to write it down to see, well, where did y'all allocate that money to? Right? Because again, I'm investing in you. I want to know, like, is it for a good reason? And do I believe in that reason? Is it when I read that reason, which I hope you do go look, because I'll just they trying to come out with their own virtual goggles, which is just to match Apple, right?
Oop.
That's just you gotta spend money to make some money.
Yeah.
I'm not mad at it. And they want to make it affordable because Apple didn't. And then you can come on over to the statistics, and these are those valuation ratios. So the PE ratio. So this is also to me a great place. Of course, we're going to do it annual. This is also to me a great place to get that average right there. It's already right here for me. It goes back 6 years. 1, 2, 3, 4, 5, 6, 7 years. You can get the average right there. Add them up, divide it by 7. And well, you'd have to do 6, actually. My bad. is that 1, 2, 3? Yeah, 7, my bad. Add these 7 up, divide it by 7, whatever that number is. If it's higher, well, let's just do it now. So 257 plus 5569 plus 15166 plus 4449 plus 5680 plus 77. Oops. 09 plus 280.51 divided by 7. So the average PE ratio for the last 7 years is 131. Currently, it's 402. Oh my gosh, that calculation that we just sat here and wasted our time doing is telling us that this is overvalued. The price is high.
Oh shit, could you go back?
Mm.
So if like the current
Is
price
what
to earnings ratio is like higher than the average, then it's overvalued.
Mhm.
And you had got the average from adding up those numbers.
Adding these 7 up and dividing it by 7. And the average was 131.8. Currently, it's 402. But of course, it's overvalued. It's at all-time high. You know?
Uh,
So that don't mean we don't invest in it. It just means that you a little late. That makes sense?
yeah.
So that's why I just be like, ugh, I'm probably gonna end up I'm actually probably gonna end up taking this class off the site just because I suck at teaching it. I'm supposed to be in here telling you to look at this stuff. Meanwhile, like I said, it's good to know it, but the chart, it's gonna tell you. So that's what all that stuff is, right? You got your profitability ratios. Now the profitability ratios, I absolutely keep my eye on it, right? Like especially the return on assets, which is it gives an idea of how efficiently a company's assets are used to make profit. A high ROA, which again, we'd have to find the average and compare it, right? Indicates that a company successfully converts invested money into income. We love that. Definitely, 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 definitely love that. Is this average or annual? Yeah. And
Oh,
then
so before we like take off, um, could you like show me how to like set my stop loss on a Webull?
what? Oh, I don't even have Webull. I don't know.
Damn.
Are you ask somebody in the Discord. Are you in the Discord? It's free. Ask somebody who uses. Spelled that wrong. See if we get an answer in there. They talking about how we went from finances to stop losses. Look at that. Look, he said, "While I got you." So let's see. So the debt to assets ratio, absolutely important, right? Just stuff that you want to keep up with. And then you have the earnings and revenue. Now, the revenue, I think it's important because you want to know what sections of how they're making their money, like what's increasing, right? Because they're not just microchips, they're also in the gaming sector. They do embedded coding and computing and graphics and all of this stuff. And we want to know which one of these is making them the most money because we want to keep our eye on that. So we can see that gaming, well, in 22, it kind of made them the most. Well, it made them the most money. 22 fell off in 23. But if I was to type in Microsoft's, AMD in gaming, which would probably be on the website as well. Let me send you this. Put it in the chat, copy and paste this too. I need to send this to my mentees actually. Mm-mm-mm. Oh shoot. Am I supposed to be in class? One thing I ain't never gonna do is be on time. Oh, okay, no, I'm good. Okay. I talk too much. So that's a good site right there. Um, what are we doing? Back up. I mean, that's honestly that's kind of it. But what do you got? You got any questions? Let's see if somebody responded for Weeble. Oh, look, somebody told you right there. So go in there and they'll help you out right there.
Okay. So do you trade earnings?
Um, I don't. So when people ask me that, I know what they mean, but I don't like. I'm not gonna like look at a stock just because it has earnings and then like want to get in. Yeah. Like I'm a swing trader, so most of the time I'm already in the trade, but I don't like get in specifically because of earnings. No.
And let's see. All right. What do you think about gaps in like the market? Do you like trade gaps?
What? This is fundamental analysis.
Oh,
I
my
do trade gaps though. I do trade
bad.
gaps, but this is fundamental.
All
Mhm.
right.
You
Let
might
me
as
look at.
well at this point, but I ain't gonna hold you. At this point, what you paid for this class, this is what I be trying to tell people. You do real I got an 8-week class coming up, right?
Yeah.
Which you're gonna be sitting up there and you're gonna be like, oh yeah, I know, but it's like $350 versus this one was 100. Feel you, get it, got it. However, imagine 8 weeks. I mean, not to brag on myself, but I know this class was lit right here. So imagine what I'm gonna be doing in 8 weeks. So just think about it. Afterpay, PayPal credit is accepted on here. You could do that too. So this is
Oh, okay.
Forex, options, investing, all of that. This is actually my last class. The last class that I'm doing, you probably saw your girl is retired from teaching. Big done, big done. Portfolio told me, I don't have to do it anymore.
um, um, hold on. Let me make sure that is all the questions I got. I'm looking at the list. Yeah, I think that's it though. Yeah, that's it.
Okay, period. Well, do you feel like you learned anything?
Oh, yeah.
Oh, you hesitated. That was ugly.
Huh?
You hesitated. That was so ugly.
Yeah, I
Uh,
did learn something though.
what we
I
did.
really
we-
appreciate your time.
Yeah. Well, was there anything that you were wanting to cover that we didn't cover?
Looking at some companies' financial statements. I mean, we already had looked at AMD, but
Mhm.
maybe like a few more examples.
Oh, hell no. But we can, I'll schedule a class in the Discord.
All right.
Mm,
Yeah. That's it though. I think I'm good. Yeah. Besides like the little Webull thing, I was asking about the stop loss.
Yes. That's in there for the fundamental. Yes. Now that's what that said on the site. Don't be saying that now that we pick a stock and go through their statements. But now you know how. And I will